Hello guys and welcome to my channel. If today is your first time coming across my channel, kindly do me a favor to hit the subscribe button, put on notification bell so that anytime I post content like this, you'll be among the first to be notified. Today's topic is how you can do your top-down analysis as a trader. If you're a new trader, the best thing to do before you probably take trades is making analysis, understanding the trend of the market so that you don't trade against the trend of the market. But before then, probably if you are new into trading and you are finding it difficult to make consistent profit every day, either on the forex market or on the synthetic market, then this is the time for you to leverage on this mentorship class now. Probably you will need somebody to guide you on how to trade the synthetic indices properly for you to make profit as as a trader, not depending on your mobile indicators or signals from different sources, or probably using the robots to trade. But you just want to understand how to approach this market the right way and trade it the right way. Then um, feel free to message me on WhatsApp. Now, when you join my own mentorship class, what usually happens is that I provide you with the necessary materials. I provide you with some softwares that's going to enable the teaching more easier for you. That is first. I also add you to my WhatsApp group community where I normally analyze charts with those in the community. Exactly. I analyze chart with them, then we do one or two activities together. So with this, you'll be able to understand exactly why you have been losing in the forex market. So with that, you'll be able to uh, resolve all those issues, and then you can also chat me, or probably if you have any other issues regarding the trading, then we can also sort it out. So the best way to understand it is looking for someone who will definitely put you on the right track. You must have been watching different videos on YouTube and still it's still not making sense, right? Then it means something is wrong somewhere. So you just need somebody to probably talk to. Then person will put you through all those challenges. So feel free to chat me up on WhatsApp, and then we'll continue from there. So that being said, let's start with today's class. Now, when you are new into the forex market, it is usually very difficult for you to be profitable within your first year or your first few months. The reason is not far-fetched because there are so major concepts, there are so many basic concepts you need to understand, and you need to how put together before you can approach the market successfully. So one of those concepts is what we call the top-down analysis. Now, on the top-down analysis, what usually happens? I have some write-up here after I'm explaining to you on what the concept means. I also take you to the chart, then we'll do some examples. We'll show you how you should be able to how you should approach your chart based on technical analysis, top-down analysis. Exactly, based on top-down analysis. Now, top-down analysis in forex trading, a time frame based approach for entry. Now, you can see when we say top-down analysis, meaning this is the in a simple term, it means doing your analysis from a higher time frame down to the lower time frame. Exactly. So most of you are fond of always focusing or staying in one time frame and executing trades, which is not right. I will tell you the reason why it is not right during the explanation on the chart. Exactly. It is usually wrong for you to just open your chart probably to 5 minutes, 1 minute, then you start placing trades on those time frame without checking what is happening on the higher time frame, because the higher time frame has huge bias which will determine if the trend is going to go up or down. So if you are trading against what is happening in the higher time frame, then it is a big problem that may, most of the time your trades will not always go towards go to your favor. Top down analysis is a strategic method used in forex trading to examine the market by analyzing it across multiple time frames. This approach helps traders understand the bigger picture while pinpointing precise entry opportunity by integrating broader market trend detailed price with detailed price action insights. Traders can improve their decision making and increase the probability of successful trades. So with soft analysis, it helps you to know the area where the price is going to. It helps you to know when and how to approach the market, either to join the trend or to wait for a reversal. Exactly. Now, what is top-down analysis? Top-down analysis involves starting with a higher time frame to identify the market overall direction and gradually narrowing down to lower time frame for finer details and entry points. It ensures that your trades align with the broader trend while allowing precise execution. So the main reason why many traders rely on this top-down analysis is for them to understand what price is going, which direction price is going. Based on the time frame is fractal. When I say fractal, your daily time frame can be giving you uptrend while your 4 hour, 1 hour time frame can be telling you downtrend. It is only when you analyze it from a higher time frame, either from the monthly or the weekly down, that you really know why price is giving you different interpretation in each of these time frame and which one are you to follow. Because if the daily time frame is telling you price is bullish and your 4 hour is telling you that price is bearish, something is wrong somewhere. It might be price is taking a reversal or a new trend is about to start. So it all depends on how you view this information and make your decision. So that is why most of the time many traders fall victim because they can see a good area of interest on the 4 hour time frame, right? And they leverage on that area of interest. And at the end of the day, price seems to fail them. Now this gets them asking, what happened? Why did these people take me out? They have this belief that somebody must have manipulated the trades against their prediction or their entry. Exactly. So, and which is not so. If they had understand what top-down analysis is and they had done the analysis just the way it's expected to be, probably they wouldn't have taken that trade earlier, or they wouldn't have even end up losing that funds they initially they lost. So top-down analysis helps you to have the view, the bigger picture of what price is doing and where price is going to. So when you have this view and you have this bigger clear picture, the next thing is decision making. So you can see that for you to be profitable, you need to understand what top-down analysis is and how to approach the market based on top-down analysis. Time frame and their rules in top-down analysis. Now we're talking about time frames and their rules in top-down analysis. Each time frame serves a specific purpose in the process. Below is a breakdown of how to approach top-down analysis, specifying the role of each time frame. Higher time frame, that is the long-term view, the daily, the weekly, or the monthly. Now, if you are a new trader, probably you are a day trader, your higher time frame you should be watching out for before you make entries or probably before you take any decision is the daily time frame. So you need to check the activities that has been happening within the daily time frame. So when you analyze when you analyze the move from the daily time frame, then you move to the 4 hours to see the direction of the trend. Then look for opportunities, probably in your 1 hour, then you go to 15 minutes or entry, depending on how you choose to do it. So two, the second purpose is to identify the overall market trend. Either it's bullish or bearish, or probably the price is ranging. Then focus area. Area you should focus after understanding what price is doing are the key support and resistance level. Trend direction, is the price going up or price is going down or price is consolidating. Major price pattern. Are you the type that love trading head and shoulder, double bottom, or whichever other pattern that is in the market? So this is where you start looking for this formation or this set, this kind of pattern before you take your entry. Then last, use case. serves as a compass for your trading decision, ensuring trades are placed in the direction of the primary trend. When you say primary trend, that means your daily trend. If your daily trend is telling you price is bearish, so this is where you start looking for probably a double top pattern. You'll be looking for a resistance area where price is going to be rejected. You'll be looking for a supply zone where price is going to drop from, or you'll be looking for a bearish order block for those of you who trade the ICT concept. So this is why you have to do your top down analysis so that you don't just open your chart, place trade, and then you're expecting magic to happen. Example, if the weekly chart shows an uptrend, your focus on lower time frame will be to look for buying opportunities rather than selling. This is what it exactly means. That means if your weekly time frame tells you that price is buying, what you are going to be doing majorly is coming down to the lower time frame and be looking for a good buying areas where you should take your buying trades from, so that it should be in line with what the weekly direction is doing. Because if your weekly sell price is bullish and you are selling in your lower time frame, the probability is very high that you might lose that trade. Except you are a pro trader who understand probably a reversal formation of trend. That is where you can definitely leverage on an opposite trend trade. But as a new trader, you are just to focus majorly on where the trend is, the primary trend is. If the primary trend is buying based on your higher time frame analysis, then your lower time frame, you come to your lower time frame and look for that same opportunity in line with what your higher time frame is saying. Number two, mid time frame context and confirmation, the 4 hours or 1 hour. Purpose, provide context between the large trend and refine your understanding of market conditions. After making your analysis on the daily, weekly, and the monthly, and you've seen the direction of price, so if any of them say price is buying, this is where you now come down to your lower time frame or your middle time frame, which is the 4 hour or the 1 hour. What are you looking for? You are looking for where we have good support zone where price will push towards the upside, good demand zone where price will push towards the upside, good bullish order block where price is going to push towards that, or probably looking for a trading pattern or which is either double bottom formation or candle what is it called, trend line. So this is where you come down to your 4 hour looking for confirmation. Okay, since we have a bias trend which is bullish in the weekly time frame, when you come to your 4 hour and 1 hour time frame, all you are looking for is area where you can usually take a buying order. So when price visit that area, then you now go to a lower time frame to what? Modify to be sure that indeed price is ready to buy or price is ready to sell, depending on the primary trend. Two, focus area, intermediate support and resistance level, break or structure, confirming continuation or reversal, candlestick pattern and volume analysis. Now, for you to get all this, watch my video on market structure and liquidity. So when you understand this concept very well, that will enable you to also determine your entry. Exactly. Use case. It helps to identify tradable zones where you will look for precise entries. Now let's have an example. A daily uptrend might show a retracement on the H4 chart, presenting an opportunity to join the trend when the price resumes its onward movement. Lower time frame entry. Lower time frame entry timing. This is where you come to do your timing. Now you can see that how do we do it? You start from the higher time frame for what? Long time view. To view the long time what price has been doing for a period of time. Then you move to the middle time frame, which is the 4 hour or the 1 hour. You'll be looking for area that has an exact point or zone in line with what the weekly time frame is giving you, the daily time frame is giving you, or the monthly time frame is giving you. Now your entry time frame, after getting those zones in your 4 hour, 1 hour, now you come down to your 15 minutes, 5 minutes, or 1 minute for opportunity of entry. Now, purpose of this is pinpoint the exact moment to enter the trade. Focus area, find trend support and resistance levels, intraday price action and candlestick formation, confirmation of trade setup, e.g., breakout, pullback, or rejection. User case, maximize precision and minimize risk by aligning entries with short-term momentum while still adhering to the higher time frame trend. Example, after identifying a bullish retracement on the H4 chart, you can use this 15-minute chart to enter after a bullish engulfing candle at a support level occurs. Step-by-step guide to applying top-down analysis. Step 1. Start with the higher time frame. Open the weekly or the daily charts. Identify the overall trend, key support and resistance levels, and any prominent chart patterns. Mark these levels on your chart for reference. Number 2, move to the mid time frame. Analyze the 4-hour or 1-hour chart. Look for confirmation of the higher time frame trend, e.g., higher highs and higher lows in an uptrend. Note intermediate level where price reacts frequently. Drill down to the lower time frame. Use the 15-minute or 5-minute chart for entry signals. Wait for a price action confirmation such as a breakout, pullback, or candlestick pattern. Place your trade with a well-defined stop loss and targets aligned with levels identified on higher time frames. Benefits of top-down analysis in forex trading. Alignment with market trend. This ensures trades are placed in the direction of the dominant trend, increasing the likelihood of success. 2. Improved risk management. Helps to identify key levels for stop loss placement and target settings. 3. Clarity and confidence. By understanding the market structure across time frame, traders can avoid impulsive decision. 4. Enhanced precision. Using lower time frame for entries, minimize risk while allowing maximum reward potential. Example of top-down analysis in practice. Um, I will take you to the I will take you to the chart now. Then we'll do that because if I should explain this in this write-up, it might not make any sense. But so far so good. We have been given the step to follow when we want to make analysis based on the trend, right? The only way this is going to be very easy for you as a new trader is when you understand the concept called market structure. When you understand the concept called market structure, you can easily navigate from the higher time frame to the lower time frame, interpreting what price is doing easily. Now let's get to the chart and let's use one or two pairs as an example. Which pair is this? Okay, this is USD card on H4. Now let's assume I want to trade USD card, right? I want to trade USD card. We are told that the first thing we should do, we should go to the weekly time frame and see what price is doing. Now, when you look at the weekly time frame very closely, the what we'll be looking at here is price action, market structure. Now, this was the high, right? Based on the weekly time frame, this was the high that gave us the last low of the market. Why did I say it gives us the last low of the market? At some point, because immediately I opened it, I was able to see all these things sharply. At some point, price was ranging within these points, right? You can see some kind of range. This is a weekly activity. So we notice that at some point, price broke structure. So from here, price has broken structure towards the downside, which created the recent low of the market, right? Now, price has now come and break above that high. So sorry, this was the high that was broken. This was the high that was broken, right? And this is the structure it broke down initially, right? Now, since it broke structure, we would have loved to use this point as area of interest for what? For sell. That means we will have marked here as our what? As our OB. It means bearish order block. So price came what and nullify it, meaning it didn't react to it. So when a valid bearish order block is broken, automatically it becomes what we call uh, a breaker block. So it's going to be acting opposite way. That was why price couldn't come down to this level, right? That was why price didn't come down to this level, because on the norms, this would have been our bullish order block for price. That doesn't mean it's not going to act when price get there, but currently this is going to be our bullish order block if you understand the concept very well. If you check my charts, sorry, if you check the channel, I have explained all this concept in that place. So what are we looking for? Just we want to know the bias of the market. Price is what? Bullish on the weekly time frame. That is just all. We don't need any other thing. Price is what? Bullish, because the high that led to the low of the market has been taken out. So price is not automatically bullish, which means price will be buying all the way up. Now, that is what we just come to confirm on the weekly time frame. Now, moving down to your daily time frame, we are looking for opportunities for entry, right? So at some point, this was the price was at this point. We will take this as a pullback. All this move, we will take it as what? Pullback. Now, price has broken structure towards the upside from here, right? Price has did what? Broke structure from here up the upside. So if we are to use our bearish order block, we say this area is a what? A buying zone, which led to what? The break of structure, right? This which led to the break of structure. So you see, when price now did a reversal into that zone, you might not get it clearly on your daily time frame. There is no problem. Immediately price came to that zone, what happened? Price started buying. So there's possibility price will still what? Move high if indeed price want to be buying. Now we are able to confirm again that in our daily time frame, price is what? Bullish. Come down to your H4. This is where you now look for a good opportunity to take buy order. That means you look for a good opportunity to take a buy order. Now, you can only do that if you understand market structure. But don't worry, if you are new and you are joining the mentorship class, there are materials that is going to make all these things more easier for you. So, for you to take buy when price did a reversal, because this is a break of structure here towards the upside. This is another break of structure towards the upside. This is another break of structure towards the upside. So in a s- in a simple let's say in a clear term, price is bullish in the higher time frame, the weekly and the daily, but in the 4 hour price is bearish. We are not going to be selling here. We need to be very careful, because price is what? Bullish in the higher time frame. The daily time frame is bullish, the weekly time frame is bullish. So all we are going to be looking for is opportunity to take a buy. So immediately price dropped up to this bullish order block, right? Which is at this point, because believe it or not, there is a bullish order block here, right? Immediately price drops to this bullish order block. Now, from the daily time frame and the 4 hour, we have been able to, I'm sorry, in the weekly time frame and if daily time frame, we have been able to identify that price is what? Bullish, right? We have been able to identify that price is what? Buying. So we are only looking for opportunity to take a buy order, just to be in line with what we have in the daily time frame. Now, when you come to your daily your 4 hour time frame, price is bullish. This is the bullish order block, but don't forget that price is bearish. So what happened here was price broke structure. It created a bearish order block. If you've not watched my video on other blocks, please go and watch that video. Let me mark it again for you. Price is bullish. This is our bullish order block. Sorry, let me make it clear. I'm still going to use another chart. Probably you don't understand what I'm saying here. I will use another chart as a reference, or um, explain. I'll use another chart to explain all these things I'm saying. But just pay attention. If you understand you get it clear here. So daily time frame and weekly time frame, price is bullish. All we want to trade is bullish trade, not bearish. So, but in the 4 hour, price has changed character, or in fact, it started from here. Price has changed character to what? To bearish. So, but going in line with what we have in the weekly and the daily is bullish. So that is what we want to do. So price has breaking structure all this week. Immediately price now breaks structure into the bullish order block, which we have in our H4. Then we'll be looking for a buy opportunity. We'll be looking for what? A buy opportunity. We'll be looking for a buy opportunity. So the buy opportunity took effect here. So we'll have buy here and exit here. Why are we exiting from this H4 bearish order block? Is because in the H4 price is what? Bearish. But in the daily and weekly price is bullish. So the overall point we are expecting price to come, even if at all price is going to keep selling towards the downside, we are expecting to see price to come to this main order block here before price start dropping. But since we are not using the H4 as our analysis, we started from the daily and we want to trade based on what we have on the weekly and the daily, which is bullish trade entry only. Then we'll have leverage on this. Now when you go through this when you go through the other block I explained, that means the other block concept, that means in my channel, now we'll be able to, you can easily identify other blocks that are valid and those other blocks that are not valid. Exactly. That is where you'll be able to get it more clearer. Now, this H4 bullish order block, you can still go as far as remodifying it on your lower time frame, because you can't just come here and take your entry immediately. No, since you've identified a bullish order block here, for you to be sure that this bullish order block is going to be a valid one, you can go as far as your 15 minutes or 5 minutes or probably your 30 minutes for refining it. So you come down to your 15 minutes. In your 15 minutes, all you just want to see is price giving you a change of character, then giving you a buy opportunity. So this is how you should approach the market using the top-down analysis, because when you approach the market the wrong way, definitely you will get a wrong uh, result. That means your trade may not go towards your direction. Let's use this H4 as example. In a normal circumstance, if the price was bearish from the daily and weekly to the daily, immediately price taps into this bearish order block, price has to start dropping. But being the fact that price is bullish in those other time frame, then it means price may react here and definitely continue all the way up once those other time frame has mitigate areas they want to mitigate to continue their move. So this is why you need to keep doing your top-down analysis before you even think of where to take your entry and how to take your entry. So this is on USD card. Now let me use one other currency pair before I use any of the synthetic indices as example. Now let's use gold, which is also part of the major pair people like trading. Now let's do the same thing we did on the USD gold. Now in your weekly time frame, we can see that price has changed character from bullish to bearish, right? Price has changed character from bullish to bearish on your weekly time frame. So it means that whatever opportunity we are going to be looking for in our lower time frame is a sell opportunity. Is that clear? It's a sell opportunity. Now you come to your daily time frame. Are we having the same yes, we are having the same opportunity. So daily time frame started giving you change of character from this point. For you to master all these things, go and watch the video on market structure. So price changed from here, right? Then price made a pullback. We can have a mini break of structure here. Then the overall is around this area. So you can see that we are bearish in the market in the higher time frame. That is in the daily time frame. Believe it or not, this area is area of interest because there was a kind of break of structure here. So we can consider here as another supply zone. Sorry, you can see here is a supply zone, so which we'll be expecting to modify either on our H4 or our daily time frame. Yes, we check our H4. Here is a here is a bearish order block, and here is also a bearish order block. And in trading, we tend to go for the extreme. We tend to go for the what? Extreme, right? We tend to go for the extreme because this second one can act as an inducement to trick people. So, but if it's going to work, if it's not going to work, it is from your H4. You come to your H4. In your H4, we're also looking for a bearish order block, which is valid. So you can see that where we just highlighted just now is this area, right? On the daily time frame. Is sorry, I don't know what is wrong with my. So it's the same area on the daily time frame, right? So it's the same area. So if this area is going to be effective now, then we'll come down to, for entry purpose, we'll come down to our 15-minute time frame. This is where we'll come down to our 15-minute time frame for proper modification. So we'll come down to our 15 time frame. What we just want to see is a change of character, right? First thing, if that area is going to work, we want to see price breaking this point. We want to see price breaking here because this was the candle that gave us the last, this was the low that gave us the last high of the market. So if price should break here below, right, it's going to create a bearish order block around this zone, right? So now we'll be expecting price to pull back to that zone. Sorry, we'll be expecting price to come into that point. Then when price come, we can take our sell. Our stop loss will be few pips above the swing high. At this point now, we'll be risking lesser. Exactly, we'll be risking lesser. Sorry, we'll be risking lesser. So when price come there, then we can take our sell entry to align with what we have in the weekly and in the daily time frame, also on the H4. Probably you are still confused, then you need to join the mentorship class to get the more details, and I'll provide you with tools that is going to make all these things easier for you as a beginner. Is that clear? Either you're a forex trader or you are a synthetic trader, doesn't matter. So once you just join my mentorship class, all this will be more easier. But if you keep pay attention and watch this video probably maybe once or two times and practice it on your chart, you definitely get it. So on gold, what you should be expecting more now is a sell opportunity, not buy opportunity, because on the weekly time frame we had price selling. This pullback. This is a pullback, right? This is a pullback. Until this pullback breaks above this high, then that is when we consider it to be a continuation pattern. Then other were just maybe probably price came to seep out liquidity. But in as much as it is now, it is more of less taking sell opportunity than buy opportunity because everything has changed immediately. Price breaks below this um, lower high here, right? Price has given us a break below this lower high, so we should try to leverage on sell more than buy in this case. So that is on gold. Then even on the daily time frame, we can see reasons why we should also go for sell trades, right? Reasons why we should go for sell rather than buy. Then if you come to the 4-hour time frame, you can still see reasons why we should consider taking more of buying sell opportunity than buy. So that being said, let's get to let's do one analysis or two on other time frame. Okay, let's go with this here, which is the volatility 50 index. So let's go to the weekly time frame. On the weekly time frame, I can tell you that price is bearish. Yes, price is bearish on the weekly time frame. That is if you follow the current trend because the low the yeah, let me check very well. Okay, we can take this as pullback. This is a break of structure here. The last low, price break above it. So okay, price is bullish. Let's take all these moves towards the downside as pullback into the bullish order block towards the upside. Okay, price is bullish on the weekly time frame, right? Price is bullish, but let's check what is happening in the daily time frame. On the daily time frame also, we can say price is also bullish because this was the candle that gave us the last high of the market, the last low of the market. So price was breaking above it, right? Price was breaking above it. So price is bullish currently. Let's say just all this one can be reversal. Price tapping into this order block if it's not sweep of liquidity, but whatever be the case, as we go down to the lower time frame, we get to understand what is happening more. So both in the daily time frame, price is what? Price is bullish. So let's check the H4. On the H4, price is still very much bullish. This is the other block. Yeah, price is still bullish. So this can be an inducement, right? This move here can be an inducement, which it did not enter into this zone. So immediately price taps in and sweep the liquidity resting here. Price can use it to trigger and totally move. But if price should break below this point now, if price should break below this area deeper, then we say the trend has changed from bullish to bearish. Is that clear? If price should break below this point, then it's no longer bullish anymore. Rather, price is bearish. But mind you, if we are to follow the external swings, but internally this currency is bearish on the H4. So it all depends on how you view your chart and where you are viewing it from. Let me zoom out a bit. I can categorically tell you that this was the last low that gave us the last high, right? And what do we have here? Price broke it, right? So which makes here an area of what? Area of interest. That means a bearish order block or a supply zone. This is why you have to check your chart very well before you make analysis. Exactly. Very, very important. Because sometimes just little error can make the whole thing go against you. I'm trying to mark out the supply zone or bearish order block for you. Sorry, I don't know what's wrong. Let me use the object tools here. Okay, good. Now here's our bearish order block. All of them cease to peak. Let's just use the horizontal line. So this area becomes our bearish order block since price has broken structure here. Is that clear? Since price has broken structure here, this is why you need to pay attention more to your chart. I guess my mouse is weak, so maybe I'll. So price has breaking structure in this area. Is that clear? Price broke structure. So we can say price just came in, tap into that bearish order block on the H4, which we will have modified on the lower time frame, maybe 15 minutes. So if we are to take sell opportunity here, then our stop loss will be here at the top here. So a few pips above that swing high. Our stop loss will have been there. Then our target now will be this point, this area, as where price is coming to. So please, if you are still confused about all this explanation, then it means you need a full-time mentorship. Because when you join my mentorship class, I'll give you materials that is going to make things easy like this for you. Rather than marking it with, or you are finding it difficult to highlight where price is or where price is going. So there are materials on ground, softwares that are going to make that more easier for you, and there are videos that is going to give you more details. But probably if you understand it and maybe you have little uh, issues, you can check my channel. I've have other videos which I explain deeply on areas where all these things can be resolved. But for mentorship purpose, you can chat me up on my WhatsApp number. Is that clear? So let's use another pair as an example on synthetic indices. I know VIX 75 is one of the favorite pair people love trading. So let's use VIX 75 as area of interest. Now, let's start with the weekly again. On the weekly time frame, price is bearish, right? Price is bearish because we can see series of price dropping towards the downside. So we don't even need to do any analysis much here. Coming to the daily time frame, price is still very bearish. Exactly. Price is what? Bearish. Coming to the H4, that means the 4-hour time frame, price is bearish because at this point now I can say this thing is more or less like a consolidating price season. Right? Let's mark the high here. Though if you watch it very well, it's not that consolidating because price broke structure. I don't know what is wrong with my so price broke structure at this point, right? That gave us the last low of the market, right? Immediately price broke structure here. This becomes this point where the horizontal line is becomes our order block, right? Becomes our order block, which will have taken sell from. So immediately price tap into our order block from here, right? We will have initiate a sell, we'll have modified it in lower time frame and initiate a sell position, which will have hold all the way down. So we'll have leverage on it, probably using these support zones, these critical support areas to exit this trade, to exit out of this trade. These are areas of support. You can see we have multiples of rejection here. So we have used that area as area of exit to probably leave the trade. Now, before this trend will change drastically until price breaks above this point here, right? When price break above here, then we'll start looking for a good buying opportunity that is based on the H4 because it automatically tells you that price will not be longer bearish at that time. Why I will not consider this area as exit is this area didn't break structure towards the downside. Is that clear? This area didn't break any new structure towards the downside. So it's all more or less like consolidation in this area, which you will have leverage on as a sell opportunity in the lower time frame based on what we have on the higher time frame, which is price is bearish, right? So as it is now, I can see this is an exhaustion phase. Exhaustion phase in the sense that price might just decide to start buying all the way up from this point. But until price breaks out the candle that gave us the last low of the market, then that is when I'll start looking for a good buy opportunity when price comes back to that zone. So as it is now, price is still within a lower a bearish form of trend. So until price breaks out from this zone, then we start seeing a kind of buying forces before we consider taking a buy, and we channel all this from the higher time frame downward. Exactly. But if you go to the 1 hour time frame now, the truth is that you'll be able to leverage on this up move, right? Because on the lower time frame, I can tell you that price broke structure here. There was a mini break of structure here. This is why you really need to understand market structure. So, which we can say this is a little mini break of structure. Why we are now, which make here as the high that gave us the last low of the market. So immediately price breaks above it, right? Immediately price breaks above this point here. Let's use the swing breaks above this point. So we consider this move here as what? As a bullish order block because this one has mitigated. So we consider this place as a bullish order block or a strong support zone for price to bounce back from. So when you go to the 15-minute time frame and modify, then you see reasons why price is pushing all the way up, right? So there are so many ways you can understand this market, but and do your top-down analysis. The first thing you should do is understand market structure because all these things I'm showing you now, it is not based on top-down analysis. It is based on market structure that I'm explaining all this. So we would have gotten a buy opportunity on the 1 hour time frame, but the overall trend from the weekly down to the daily is even down to the 4 hour price is what? Bearish. So this reversal, probably price is trying to now switch from a downtrend to uptrend. That is why we are getting this reaction on the 1 hour time frame. So this is why you need to understand market structure so that when you're doing your top-down analysis, it will be very, very easy for you and you will be able to identify the valid areas for you to take your entry for buy or for sell. Is that clear, guys? So please, like I said, you take your time to watch this video because there's so much information here that I've just shared with you guys. Take your time, listen to all these explanation and follow the steps on how you can do your top-down analysis from the daily for a long time. You check the daily, the weekly, or the monthly, the reasons behind it, why we are doing that. You come to the mid time, the 4 hours. We are looking for areas that's going to align with what we have on our daily or weekly. When we have things that aligns with it, then we come down to the third point where we'll be taking our entry. Is that clear, guys? So this is how you do your top-down analysis as a trader, either a forex trader or synthetic market trader. So that being said, if you are still interested in getting more details, more knowledge, or you want somebody to hold you by hand, tell you, okay, this is what you should do, this is how you should approach the market, then don't hesitate to chat me up using my WhatsApp number. You can also check the description of this video. You see there, then you can take it. We can take it from there. Is that clear? So thanks for watching. If you have any question, you can put it in the comment section, or you can also chat me. But please, if it involves talking about how you to do the analysis and everything, then the only solution is to just join my mentorship class because that is where you get full access to every other information and every other material for you to understand this forex market the right way. Is that clear, guys? So that being said, thanks for watching. If this video has give you making any meaning or gives you any info or impacted you in any way, just kindly give it a thumbs up and don't hesitate to share with others uh, to also benefit from it. Shares and see you in the next one.